Good morning, good morning. Happy Friday, everybody. Welcome, welcome. Welcome to the tradingsyndicate.org, and I am JJ. Your entertainment director for the evening. We finally got some selling, right? We finally got a little bit of liquidation. So I had a level at 20 and a quarter. We ended up going to 20 and 3/4. 2 ticks. Finally got some liquidation. Now, our main level of interest, ladies and gentlemen, is this area here. See, this is the inventory. It was sold. Now it's going to be put back on sale. Back down here. I just wanted to say this before I forgot when these thoughts are going in my head. Welcome, everyone. What's up, Jam? So I spent all morning watching this market, kind of waiting for a trade. So what I did to pass the time was I was on Motorcycle Trader, fantasy shopping. And no, I'm not going to buy a motorcycle. But that's what I do while I'm waiting for a trade. Or if you're not into the two-wheeled variety, bring a trailer works, right? Classic cars. But other than that, that's really what you do. You don't overtrade. You sit and wait for your opportunity, and then you take the trade. You know. And I'll show you the trade I took. I was late. I wanted to short here when it got under this area. And I thought I'd be able to hit the 12s. But I got distracted, as I usually do. And I ended up hitting the 11s, and I covered in the 9s. If I had better trade location, it would have been a better trade. And in hindsight, I probably could have entered a short a little higher, right? But that's pretty much been my morning. So we're looking to see if we can break 2062.07 and come down and transact here. I did a video and I posted it on X, and it'll show you how we use the concept of lookout bids. Now, for us, a lookout bid is just a level because we don't have a market maker who talks to us. And even if we did, it'd be useless because all trading is electronic now. So if we break this 6207 level and get underneath VWAP, your first lower target's going to be 3.5, which is just under here. Right? You need to break this area, and definitely we need to take out 6205 and a quarter. So that's going to be our first target, and then it'll be lower. So there we go. We're finally filling these single prints. Finally, the shorts are getting some action. They've been waiting all night. They've been waiting all night for this liquidation. What's going on, Raj? S. Phil Ronan? See, we get a little bit of responsive buying right here. Just a little bit. Right? And in that video I told you, this is where those larger shorts are going to be bid to cover. So they sold a bunch here, they averaged up, and they're going to take some risk off here. It's just structural places to look for where buying is going to be. Right? Now, if you're still short and you didn't cover, right, how do you manage that process in a practical way? Well, if you're still short, say you're short 15, 14, you had better trade location than me because you were a bit more on the ball. That's fine, that's good, right? There's sellers at 13. They helped push price down to 10.5. So if you're short here and you don't cover, say you're short 14, and the market gets back, I mean, I'd cover 8 because, I'll take money. I don't like leaving money on the table. But if I see the market start to lift over VWAP and then take out 9 3/4, that's my warning sign that my sellers are seeing buyers and they're raising price. If you're a short seller, if you see that, the concept of price being moved higher because buyers are coming into the market, right? So as buyers come into the market, sellers raise price. As buyers leave the market, sellers lower price to capture them, right? It's not a difficult concept. So if you're short 14, 13, and the market gets back above VWAP, that's your warning. Otherwise, now you can stay short till 4 3/4, right? So that way you can manage your trade. Managing your trade helps you manage your business. Now let's see how this price interacts. There's our lookout bid, okay? Now our next lookout bid is at 5 1/4. So my market maker is bid 5 1/4, and if he gets hit, he'll call us and tell us there's a lot of selling or it's light. Don't worry about it. Depends if there's buyers there, Jam. If there's a lot of buyers, the offer will lift like it's doing now. Right? If the sellers are really competing, they'll take out 5 like it wasn't even there. Be like when Arnold drove the Harley Davidson through the glass window. Right? So that's how you use a level as a lookout bid. Now, why is that important? Well, if you're short and you're still short and it stops dead at 5 like it hit a brick wall and turns, cover. If it breaks 5, you could stay short. And now you could use the tops of these candles to tell you if the sellers are still there. So I'd go like that, right? Sellers are competing at 7. And as long as the market doesn't get back over 7, you can stay short. Pretty simple. Takes a little getting used to. Takes a little practice. But it's simple. And this way you can short intelligently. Just instead of like closing your eyes and shorting and hoping it works out, right? Why not use levels and balance found closer to the US Open instead of closer to yesterday's Open? It's just where I saw it, Pollux. You can use wherever you want. As long as you remember how I keep saying your levels don't have to be the exact as mine. Just as long as price reacts at the levels you choose. So you could use ones higher, right? You could use levels up between 8 and 13, right? Because it's still the same product. So as long as you see that two-sided trade, right, you're good to go. I took my balance levels. Where did I find them? I took my balance levels Pollux here, right? Between midnight and 3 a.m. But you got to remember, I was up at 5 a.m. So when I looked back, does that make sense? See, I'm up here. I wake up at 5, 6. So I'll look back, and that's very obvious. Does that make sense, Pollux? Right? Had I woken up here, I would have used this. But since I woke up at 4 o'clock in the morning, that was the closest balance zone that I saw. That's all. And remember, you can use distribution balance, accumulation balance. It doesn't really matter because it's all the same product. A company like Klarna valuation dropped. Well, it's still in the billions, Agatha, so Wall Street will still have that in their grubby little paws. Guys like me work on companies that investment banks don't want to touch. There's still good money in it. Listen, if you sell 300 million shares of stock, even at 50 cents, it's good dough, right? And I'm not one to turn down a paycheck. Under $5, under 10, under 20. My specialty is sub penny to like 30 a share. I'm working on something, Pollux. I might just do that. We should talk. I'm sort of like, those guys with the one-man band. They've got the drum and the cymbals, and their hat is like the top cymbal, and playing the harmonica. Because I do the job of everybody. I'm the trader. I'm the salesman. I help with the legal. I help with the accounting, the transfer agent, all of that. I'm a one-man, one-stop shop. Investment banks have different divisions that do all that stuff. That's for bigger companies. Oh, cool. Let's talk. A little short covering here. See at this 5? See how it's kind of slowing down when 2 ticks underneath the level that I drew? Now some buyers are coming in. So let's see how much buying comes in. And can we get back up over VWAP? If we can't, then we'll keep correcting inventory lower. What is the other thing that I have not mentioned that is irresponsible of me not to have mentioned yet? It's the gap. So if we were to open this market at 6206, we are opening outside the previous day's range. Now, a simple way of looking at that, and the truth of the matter is, that when you open a market on a gap outside of the previous day's range, it means that there is a change in business. And when there is a change in business, then you have to, as the penguin would say, govern yourselves accordingly, right? So, what does that mean? It means overnight inventory is long. It's what, 98% long, right? We've already corrected inventory down to VWAP. To get a true inventory correction, we need to come down and tag that close at 61.96 from yesterday. Now, yesterday we opened on a gap, but we filled it. Right? We filled the gap. But if you will recall, we filled that gap by, let me see. Just by a few ticks. Right? Yesterday's low came in through the previous day's range by a few ticks and then boom, rejected right back out. So that's the problem with this market. And then we've got this huge gap here. Right? So gaps, when you start stacking gaps on top of a market, two things happen. Well, at least two things. Two things that I can think of right now. Number one, the price action gets horrible because nobody wants to buy in size when a market's built on gaps. When you build a market on gaps, let me kind of give you an analogy, right? Do you ever see those pictures of somebody standing? They use a chair and then they put the stool on top of the chair and then they put a box on top of the stool and they're trying to reach the top shelf of something. Well, that structure does not really inspire confidence if you're going to buy 10,000 contracts, right? This could all come falling down in a New York minute, right? So it causes the market to slow down because larger traders and also because today's month end aren't going to be taking large positions, right? So the market just keeps getting marked up. Now, if you're a short seller, you have to be aware of that the market could come falling down, and that's great, but when it stops falling, you have to pay attention. When it finds the bid, when the market finds those buyers, and then the price lifts, see, we said VWAP, right? Here to VWAP, there you go, right? When that happens, that's also a tradable event if you're a fast scalper. Buy, stop, out, right? So if you know what's going on and you're shorting and the offer keeps going lower and the market doesn't take out levels where the sellers are going to be, you could stay short, right? And this is practical information that you can use. You don't have to have market profile. It helps, but you can understand how the sellers are competing, right? And I always talk about shorting the backside of the move. This is the backside of the move. The backside of the move is when you've identified that sellers are competing, right? And once you've identified sellers are competing, that is your signal to get in the trade. Then you have a place to put your risk, right? And as the market goes lower, you have a place to understand that, hey, if these levels get taken out, if the market comes right back up, I know I should be cutting my risk. Use the levels, right, to tell you where to close your trade, right? This is practical, simple ways of trading where you don't need to memorize patterns. You don't need to memorize anything. You don't need any special indicators. All you need is the ability to draw a straight line and pay a little bit of attention. If you can do that, right, and not get sucked in to all the mumbo jumbo that's floating around out there, right? It'll give you an edge like you won't believe, and you won't believe how simple it is. Right? There's no reason to overcomplicate this. None at all. Right? Now, here's where the problem lies. Okay, that's the case for. The case against all of this and why people lose money is because they feel the need to make money instantly without watching. So when you watch a market, you'll start being able to notice subtle things going on that other people miss. Watching a market is like listening when your girlfriend talks. if you zone out, you're probably going to get in trouble, right? Pay attention. Take some time and pay attention, right? The against case for everything I say is impatient, bad disciplined, sort of lottery ticket mentality when it comes to trading. If you have that mentality, what I'm telling you about sitting and watching a market, it's going to be very hard and it's going to be annoying because you're going to be, this guy's not trading, this guy's not trading, this guy's not trading, right? And then, of course, you'll go trade and lose a lot of money, right? Because you have no clue what you're doing, right? Learn your skill, learn your craft. It's something that nobody can take away from you once you do, right? Once you learn this, nobody can take this away from you. Spend some time learning it instead of just churning accounts, right? Now, of course, you want to churn accounts. I'm not your father. Go do whatever you want, right? But if you want to learn how to make a living, just pay attention. Yes, it creeps downward. I am listening. You've been listening. The market creeps downward when there's a lot of short bids, right? It's like every time you push down, you hit a buy order, and then the market goes up again. And then you move down again, there's a buy order. So that, if a market just falls, it means that there are no underlying orders to catch the movement of that downward sell order, right? So for example, right, if I put in an order to sell 5,000 contracts and there is nothing in the order book, now don't go look at the order book. All you need to do is look at your chart, and if the market goes like that, that means there was very, very little buying in the order book to absorb that size, right? If it goes like this, right, that means there's orders that it's transacting against. And that gives you insight if you're a short seller. See what it's doing right now? There are buy orders between 62.04 and 6, and they are cushioning that blow down. So the market's kind of jerky, right? It's almost like trying to close a suitcase that's got too much stuff in it, right? It's like an overstuffed suitcase. But if there were no buy orders here, this thing would just go psh, because all I'd have to do is show a 5,000 share sell order, and all of these bids would just scatter. They would scatter like cockroaches in a New York apartment when you turn the lights on, right? Boom, they're gone. That's how I used to short stocks in the old days, right? We were short pets at $2. It went to 7, right? My trader froze. He literally froze on the desk because we were out so much money. We were short at 2, averaging up, bang, 7 hit. This is before we realized how to watch a seller on the candles, right? We would just short everything because the insiders were always selling, so they'd always push price down. So all you did in the morning is you'd short 5 stocks. At least 3 of them would pay off, right? Give it an hour and cover. So we're shorting this thing. It goes from 2 to 7, and my trader just freezes. He's got a sell ticket in one hand, the phone in the other to call a market maker, and he just looks at me and he just stops moving. It's almost like he got frozen in time, like, you know. So I got up, I walked over it, and I kicked his chair as hard as I could. You know, and I'm like, snap out of it, keep selling. And then the stock went to 8, 9, 10. Once at $12, right? Well, there was this old short seller who shall remain nameless. He was one of the most feared short sellers. And when his 4-letter market maker symbol ID showed up on a stock, he came on at $12 and he showed 1 million shares at 12 for sale. And he put 1 million shares at 11, and he just hit every bid. And we were able to get out just by the skin of our teeth, thanks to him. But that's what you do in a stock. If you want to bully a stock down, you come out and you show some size, right? And then you start hitting bids. But you got to know what banana to peel and what not to peel. Because sometimes you'll do that, and if the guys behind the stock are really loaded, and you offer 1 million shares and they buy it, now you're short 1 million shares. Then things get tricky. Right? But it tells you how markets work. Right? And we try and use those lessons that I learned and put them on a chart. Make it practical, right? So is the seller aggressive? Right? Right now the sellers aren't aggressive. Oh no, we used to eat stress for breakfast. That was our motto, right? You eat stress for breakfast, and then after the close, it's it's Jack Daniels and Marlboro Reds, right? It's funny. All the young guys ask me, "How did you guys handle stress? Did you go to like yoga or practice mindfulness?" I'm like, "Yeah, it's called Jack Daniels and Marlboro Reds." It's not the healthiest way to manage stress, but that's what we did, right? Uh, so we've got a little bit of a rotation there. There's a lot of short covering. Let's see if we can actually move that point of control lower. If we open here, we'll still open on a gap. So be aware of that. Now it is the last it's the last day of the week. It's also month end. Monday is the last trading day of the month, so market makers will use that to mark their markets because they have to provide liquidity through to the end of business on Monday. But for the rest of us, today is month end. So remember, right? Don't do anything knuckle-headed dumb on month end, right? Only trade if your setup is present. Don't do anything crazy. And end of the quarter. Here we go. This is healthy. This is healthy. So we're going to open on a little gap. Let's see if it fills, okay? Good, good. Come on, sell it off, right? Liquidation is good. There we go. And they're off. And what a month end it's been. There's buying here, ladies and gentlemen, because of the gap fill. So, right? So if you are long, I'm long at 5 and a bit. I'm offered at 7.5. Taken at 7.5. Crap. Offered at 7.25. Out one at 7.25. I got one left. 6.75. I'm out of the last one. Overnight point of control is 9.5. If we take out the 9.5s, remember there were sellers. That's where this whole mess started, right here. Right? We had sellers here at 10 and change. Right here. Okay? If you are long, remember there's going to be competition here for your customer. And then up here at 13. It's interesting to note where those standard deviations are generally where the sellers will be or close to that area, right? Because they're going to execute at the same levels, right? Now, if we have buyers lining up, the sellers will raise price to 9 3/4. Right now, no dice. Just give it some time. Make this bigger here. Remember, if you are going long, inventory is above us, right? So expect resistance. So sell into strength, like I did when I took that trade. Sell into strength before somebody else grabs your customer. When you are long, you are a merchant, right? You have product to sell. Dude, if I tell the girlfriend that I caught that you were eating McDonald's today, she will drive down. That's brutal, Raj. End of quarter, not quarter pounder with cheese. All right, can we get past VWAP, right? We've got the Iron Curtain here, right? Mean Joe Green, LC Greenwood, Jack Lambert. They're the Iron Curtain. They're holding price down. Let's see. Will they let price breathe above VWAP? Now let's see who gets that reference. Oh. No one? Oh my God. Doesn't the name Vince Lombardi mean anything in this town? Good Lord. There you go. Thank you. Hey, there you go. Thanks, Petra. Packers? Oh. Okay, Vince Lombardi, yes, Packers. You grew up in Pittsburgh? No way. Cool. Never been there. Boy, this is choppy and slow. We have any news today? What's the president up to? Has he had his Diet Coke yet? Maybe he'll say something inflammatory. Yeah, pretty much, Raj. Exactly. We're filling out the old singles. Let's get the president a couple of Diet Cokes and his cell phone so he can tweet something. Maybe we can move the markets a little bit. Get some action in here. uh, some buying at the open. Did you see how it came down to the open and just ran away from it? So we got some bids at 4, right? We've got bids at 4. Let's see if those bids hold. 4, 4 3/4, right? So you're buying a little there. Say you want to build a position, right? So if you start building a position off of that 4 3/4, right? you'll want to put some offers just at 7, just to see if anybody's interested in buying at 7, right? I got rid of 1 at 7, right? Now let's see if they flush it back down again. I was moving kind of slow, so I only bought 2 contracts. I'm out at the second one at 8. Okay. But the thing is, to buy a little bit here, you use 4 3/4 as a warning light, right? And then if you want, you can put your stop somewhere in between that standard deviation and 2 and manage your risk that way, right? And if you put on a little size, you can sell into this strength, right? This is the accumulation. Now we're going to go and distribute. You know there are going to be sellers here, so make sure you get out before the sellers jump in. If the price keeps going up and you still have inventory, put it out for sale. Put your sell orders out so these big green candles can eat your sell ticket and you can turn your inventory into cash, right? So why did I take that trade? Because we found the bid. We found the bid. I bought a little and I sold into the strength that was created by a short-term lack of supply. Good stuff, Hank. Yeah, just keep taking it in and just chill, right? When you watch a market and you're not actively trading it and you're not in a position, you'll be surprised at how much information you absorb and retain, right? Because you have no attachment to the outcome, right? It's one thing to absorb information. The other is to retain it so you can use it in a practical manner. If you are not attached to the outcome, you'll retain it much better because you're not in a stress mode, right? Attachment to outcome is the worst, especially for retail traders. I know, I experienced it, right? And the only way I was able to do that is to not trade, to sit and watch. Something else funny happens. I know it sounds weird. When you start watching and you start enjoying watching, you'll start, something will be funny. You'll be like, oh yeah, there's going to be buying there. Oh my God, there was buying there. And you'll remember that, right? You'll actually remember that because you're attaching, right? You're attaching a positive feeling to it. What do they call that? Positive reinforcement, right? I don't think negative enforcement works in trading because when people lose a lot of money, it doesn't stop them from losing more. A look above and fail? Yeah, but only down to 7, Pollux, because the position's between 4 and 7, right? So what we're doing, brother, right now is we're taking that position that we bought here and we're selling it here. And as a market maker, you know that difference with size is beautiful, right? We'll do that all day. I'll buy 4, sell 7, buy 4, sell 7 all day, right? There you go, Al. Exactly. See what I mean, Pollux? How it finds the bid? Now, let's see. We know that there are sellers here, right? They've raised their offers a little bit. But you know there's going to be sellers here and here. And they only will lift price if they see enough buyers. The one thing about markets is if you hold price steady long enough, it'll attract buyers. Just like a nightclub. Just like a nightclub. So if we don't break 6,200, 6,190, and 6,186 anytime today, look for the market to get marked up into the close. Then everybody will be a happy camper. They'll have a good weekend. Be all happy for the 4th of July, right? You know, go to the golf course, hang out with Judge Smales, you know, brag about how you got the stock market beat. Ugh. Hmm. Yep, came right to the top of that rotational zone, stopped because that's where they own it. So they stopped selling. As soon as you stop selling, people will start buying, right? Works every time. I learned that lesson by watching a man lose $100 million. There was this guy, he had a deal, he took it to 17, 18 bucks on NASDAQ. He made over 100 million bucks. And the stock ran from 18 to like 25, and then people started shorting it. He turned around and he took that $100 million and he started buying back the stock to try and support the market. And he got crushed. This guy was so rich that he had two Range Rovers, one to drive while the other one was in the shop. Lost it all, trying to defend the price of his stock. We're like, just let it go. We're like, why don't you short it yourself? Take the money on the way down, then do a reverse split, and start all over again. Right? It's the problem when you develop a conscience in this business. Okay, but my shareholders. It's the only guy who cared about his shareholders that it led him to ruin. All right, after this, let's go from 11 to the 12s. Exactly. He died on the sword. And I learned a very valuable lesson from watching that. Never, ever buy back your stock. Just sell it and walk away, or sell it, short it back down, and then do a reverse split and start all over again. It's like hitting a reset button on a video game machine. Step one done, Doc? Good stuff. There's the 12 I was talking about. So overnight inventory is not correcting in any kind of meaningful fashion at this time. Right? Make note. When overnight inventory is long, see it already corrected, right? This market boom will end. It'll end when the order flow runs out. Maybe Monday, Tuesday, but I wouldn't short it. I'd never ever go short over a weekend. A month-end weekend is the most dangerous short because if somebody is offside, and I've seen this happen, if somebody is offside going into the weekend, on Monday they will get bought in. And if that happens, the market can gap up again on Sunday night. Be very careful shorting over a long weekend, right? I got a really good story about this one. One of my best friends, he shorted this deal on Friday, made a ton of money. On the week he was short. Friday the price collapsed. He didn't take the money out of the account. He didn't cover the short. Friday he went and bought a brand new Mercedes Benz. We had a great weekend. Partied, he was buying drinks. It was wonderful. Monday morning, the stock gapped up pre-market. Compliance bought him in. And Monday afternoon, I gave him a ride back to the Mercedes-Benz dealership to return the car. So don't short over a weekend. Another lesson learned on House Street. That was one of my favorite. That was one of my. That was a great weekend, man. Oh, yeah. See, this is why retail, they don't have access to these really kooky stories, so they don't understand what goes on. So that, there's no cautionary tale, right? This business is full of cautionary tales. All right, we're expecting sellers at 13. If they're not there, be careful because we're going to rip up to 20 to 16 and change. So let's see. Okay, sellers are engaging at 13. Are they aggressive? Right there they are. You can see them. They're right there. Right? Now, how aggressive are they? Volume's light. Everybody is in the Hamptons. Oh, that was the funniest weekend because he was acting like Eddie Murphy when he was showing those girls his limousine outside the bar. Oh, never laughed so much. Okay, let's see. Do we have enough buyers in the corral that we can open the gate and raise price? Not just yet. Not just yet. Hey, I hope we have, what is it, Ray's cocktail hour today. It's Friday, right? Here we go. And it's creeping. We're creeping up on 14 and 3/4. No, that seller's still there. They're not aggressive. This is the worst type of price action to short, right? But now you know better, right? You saw them accumulate their inventory here. Now they've loaded the trucks, and this is the road to Walmart. When we get to Walmart, we're going to go sideways and distribute. Okay? You want to wait until they put it on sale again if you want to short. Identify a seller. Right now, there's no reason to put it on sale because we loaded enough buyers in the corral, we've opened the gate to higher price. Ah, there's that seller at 13 again. Now watch, right? If that seller does not let the market above 13, then you can short and put your stop above the top of that candle. But if the market starts offering above 13, that is your warning sign to cover. So if you went short now, hit it, stop, and then put your buy orders here to see if you get filled on the way down. If the market lifts above that white line, govern yourselves accordingly. And your hard stop will be there, right? That's how you short intelligently, and if you get stopped out, it's not the end of the world because it's a small amount of money. Those are the people who want to try and short the backfill, people who are itching to short. If you're going to do it intelligently, right? It's tricky. It's a tricky month end, man. This is one of the most historically ugly short squeezes I have seen in a while. They have just had the shorts in a meat grinder now ever since that gap. They did that gap back in the middle of May, then another gap at the beginning of June, and then this gap, and it's horrible, right? Remember I said if it gets over that, your next stop is this 16.5, because there's a structural stop there on the half hour, right? If we take out the overnight high, right, my next target up is 62.30 and a quarter, which I never thought we'd get up to. Jeez. Now I have to ask myself, how many people who transacted here got short underneath 62.09? Well, because if enough people got short under 62.09, this thing is going to go and take a swipe at the overnight high. The more people you get short at lower levels, the bigger the rip is going to be, right? When you get people short, you create buying. You create buying through the concept of leverage. And if you have enough people short, all you have to do is restrict supply. Now, I'm not the only person who knows this, right? Everybody knows this, right? If you restrict supply, price goes up. So that's how electronic execution is programmed. That's why people have algos. It's been horrible for any kind of short selling, right? But I've been saying for years now that when they changed the rules in 2005 and altered the structure of these capital markets, that shorting was a fool's game. There's 16. We'll be looking for 20 and a quarter next. There's no reason to short because there's no sellers, right? If no one's selling it, how is the price going to go down? Think about it, right? They changed the capital structure of this market in 2005 with regulation SHO. And ever since they did that, nothing has been the same, right? Oh, right. They went from commission-based to assets under management, right? You change the way the revenue generation model works. Then you go in and lower interest rates so people just hold on to stuff. It's beautiful. There's the overnight high. Told you. Now, they're going to sell into it here because there's liquidity. What does liquidity mean? The buying allows large traders to sell their size. So if you were long here, dump into this, right? right? If it gets accepted over 22, right, then we're looking for 30 and a quarter. But for now, they're going to sell into it a little bit because why not get some cash on a Friday? So all that's happening now is large traders are using the people who are trying to cover their shorts because we're at the overnight high. That's where people would have their buy stops, right? And people who don't use hard stops will be bidding there. So the sellers will sell into this now. Because wouldn't you? If you had size, it's a great place to sell. See? Right. That's your advertising. When you take that previous day high, overnight high, when you take out those levels, you're telling people to come in and all those FOMO longs, right, rush in to buy, and that's when you plug them, right? You plug those bids, right? Right? I'm buying here, it's going to fly. Great. You want 200 contracts? Sure, I'll take them, right? You want 200 more? Right? Now you see how it works? Buy stops are a great place, are great to sell inventory into. New all-time high for the 4th of July. Let's not get ahead of ourselves, Ronan. We still have, what, a couple of hundred points? It's around 6,300, isn't it? But wait a minute. Don't you guys have some sort of tariff thing going on? It's July 9th, right? Raj was saying. Isn't that like a big day? You've got 62.78 and 3/4 as the all-time high. Is that on the continuous contract? Okay. Watch out now. As the next half-hour bar opens up, right? That's a poor high. That means they're selling into it. Be very careful. It's getting a little jumpy. Might be a little bit of news on the 10 o'clock too, right? Data. Oh, now they're saying the deadline doesn't matter? Well, why would you have a deadline and then go back and say it doesn't matter? It doesn't really make the government look that good, does it? Now I understand why you're using that verbiage, Rolly. 62.30, this thing, just be careful, folks. Right? There's nothing to sell into this. Right? There is nothing to sell into this. All of the inventory is underneath us. Right? See, it's just, and the sellers get greedy because they know everybody in the dog, cat, parrot, alligator, whatever your animal of preference for a pet is short. Yep, longs are paying. So if you're long, that's beautiful. Right? I'm looking for 30 and a quarter. And that's kind of a new, that's an adjusted level based on the old contract. So I want to see how if it's at all relevant, because it's the top of my 4 times cost basis zone on a monthly scale, I guess, monthly time frame, I should say. And I don't have any levels drawn in above 62.30, which I suppose I should have done. I didn't think we'd get this high. Jeez. Frickin' thing. Okay. A little distribution here. Just trying to find just some levels above 62.30 because I honestly did not think it was going to get up that high. I thought we'd get some sort of an inventory correction, but we have sellers are here now at 26. Oh, look at the point of control up here. They're coming for it, hot and heavy. Hot and heavy, ladies and gentlemen. Nothing like a quarter end, month end, Friday over a summer short squeeze. It is something to behold. So let me get you, what I'm doing here, why I'm quiet, so I'm working on some longer term levels for you. 62.70. Yeah, this one's going to hurt. It really, if you're a short seller in this market, I feel bad. I feel bad. You know, these markets, you don't mess around with these markets, really. I mean, it's, if you don't know what you're doing, sit back and learn and enjoy the learning experience. Because what you're watching, ladies and gentlemen, as annoying as it is, if you're not long, for people, what you're watching is history being made. These markets are really historical. Never seen anything like it. Yeah, this is a hell of a squeeze. You can literally hear them screaming. If algos could scream. Hang on, I'll have some more levels in a second here because I have a bad feeling it's going to break out over 30. So you might as well be prepared. 62.40. little more, little distribution. See these little mini distributions here and here? Coming right up. They're about 9.5 points apart on these levels. They seem to be working. Watch when the market gets low and watch the buying response as soon as it hits a level. And it'll show you how aggressive the buyers are. So here we go. I'm just going to get you guys some new levels in the room. I'll post a chart on Twitter later as well. Oh. So here are levels. If we take out 62.30, well, truth, if you were going to be short anywhere, at least you waited. Nice work, Dougie. Way to go. Sweet. That's the way to do it. That's the way to do it. See, and I just was wondering, if all you were doing was looking at car pictures when we were doing our one-on-ones. Someone was paying attention. Nice work. By the way, that paint job's going to look amazing. It's going to look amazing. Hey, Roman, thank you. I've just bugged you. How would you trail this? You're long at 62.05? Oh, man. I'd be watching for 30, and I'd be out if we can't get over 30. And then maybe the worst case scenario, if it breaks this structure right here, you could use maybe 23 as well. This market, I tell you. Well done, Doug. Well done, citizen. Nice work, guys. So if it does a look above and fail of 30, then the long should, that's where you want to be kind of taking some profits. If it rips to 30 like a hot knife through butter and doesn't stop, 62.40 will be the next target. They're just 10 points up the targets. Yeah, me too. I love watching people hold trades longer. I think that's beautiful. Right? Because that means that they're learning how to get comfortable in that price action, right? And that's very nice to see people getting comfortable in price action. Because usually retail traders get spooked out, right? To be able to sit, it's like surfing a bigger wave, right? That's good. Love to see it. You're short on the coin of bitterness? Well, I haven't looked at it. I don't know. I never considered shorting it ever. Uh, you know what? As long as it doesn't take out 10,008,400, you'll be all right. I don't know. I don't trade it. When it falls, I buy a little bit and put it away and forget about it. Just micro amounts. Nothing to write home about. There's 30. I don't actually trade Bitcoin. This is, yes is enough for me. So we stopped one short shy of my 30 and a quarter, which is a longer term level. That's okay. One tick I'll take. That's close enough. Beautiful. Now, if we can't get back over the 29s, look for it to come down to about 26, 25 and 3/4. Try trading with 100 times leverage on Bitcoin? Nah, I'm good. It's too much excitement for me. I'm getting old enough. I'm almost at that age now. A couple of more years, 3 to 4 more years, I'll be able to get an executing trader and not feel bad about it. Just yell instructions all day. Right? It's like when you become an old guy and you get a driver for the Bentley, right? Good stuff, Topsy. Hey, listen, if you could short the backfill or go long the backfill, see, I told you 20, 25, 26, 25 and 3/4, didn't I say 25 and 3/4? Right? So if you're long at 5, I'd lose a few up here, right? At least take profit on one, lock that in. Right? If it gets under 23, then it's going to start liquidating a bit more. There, see, watch. Right? You always want to sell into strength. Beautiful look above and fail of 29 and 3/4. So if you are short, you're looking for bids at 21, 20 and a half. Nice work, citizen. Nice work. Right now, if we can't get under 22, you want to have, if you're short, say 28, 27 against that 29. If you have a lookout bid at 22 and a half and it doesn't get filled, then you know that there's no supply. Right? Have a good one, citizen. Enjoy your weekend. Nice trading, folks. Nice trading. Right, so we've got lookout bids at 22.5, and if they see any action, we know that we can drop our bids under 22 and try and suck those sellers down, maximize our short. Come on down. I'm talking about just this area here. There will be buying at the overnight high, which is just where I said. Pretty cool. Because the shorts are trapped under the overnight high, right? So you long should have liquidated into that, right? Because we did a perfect look above and fail of 29.75. Now, I hesitated, but you should have been short up here at 28, 29. Stop here if you're fast. Otherwise, you're short, you stop, and you're putting your bids in. Well, why do I keep hitting that button? Can we get rid of that button? Jeez, I hate that thing. Ugh. So yeah, little inventory adjustment, right? Little sale. Good stuff. Good, good, good. Oh, it's nice to see everyone making a little bit of money on a Friday. Month end. Okay, Timo, cool. You know, when I shorted these markets, I'll tell you, truth. Honestly, when I'm short this market, I'm like nervous like a long-tailed cat in a room full of rocking chairs, right? Because all you need to do is drop one size buy order and rip. So don't worry about covering too early again. You'll get better. Good stuff, Top C. I'm a nervous short seller in this market. I'll admit that any day. Oh, you know what? Thank you for reminding me. I got a chart Netflix. That's one chart I don't have in my chart book. Better write that down. What's it at now? Oh, dare I even look? Look where they found the bid. Watch out if you're short, ladies and gentlemen. If there's no sellers at the top of these candles, govern yourselves accordingly. Leaping lizards. $1,300 a share? Holy cow. Wow. Jeez, that would have been a buy of the century when it crapped out, eh? Remember when it crapped out? Went from $700 all the way down to 2 and then just ripped. Dear Lord. That is a chart. Whew, that's beautiful. Okay, what are we doing? Oh, what's next in this kooky thing? Yeah, the balance zones on Bitcoin have been working. And I just used them to add a little bit to the position. I really wanted it to go down to 72,000. I never got any down there. All right. Well, yeah, okay. We got sellers, right? The sellers are there. Jeez. Five minutes left. Nice work, Topsy. Microsoft, are we creeping? Oh, close. Almost hit 500. I've got a 504 target on Microsquish. Just watching that circle. Ooh. Could not get past those sellers at 220 on CRCL. That's okay. Need to distribute. And NVIDIA almost at 158. My target is 158.58 on NVIDIA. Let's see if that's any good. Well, we did not fill the gap, Josh. Oh, Friday. You guys want to do a price action lab? Or are you done? Enough trading for the week? Let me know. They're at 11. You're always down, X. What's going on? Good to see you. In the room? You're the only one down? Because if it's Friday and you guys don't want to do it, I'll just chill. Okay, we got two. We'll keep it short if you want. I'll just do like half an hour. Let you guys ask questions if you want. No problem. Don't worry, Jerry. Well, now I got to find something interesting to say, don't I? Your gatekeeper, your goalie in this short sale is 21. If we can get under 21, you're in luck. There you are, one tired teacher. You could also chat in our ES room too, in the Discord. Now that you're in there, it's okay. It's Friday. If 3 people show up and they have nothing to say, we'll go home. It's not a big deal. Here's 21. Can we break it? We dipped underneath it for a little, one half of a 1 minute candle. See how the bids come in? So if you know where the buyers are and you're short, then you know where to cover. Right? If you want to go long 21, put your stop underneath the overnight high. And look, you've got sellers at 24, so sell 23. It's not a lot, but it's a scalp. I think this would be a wonderful place to distribute all of that inventory from under 62.10. You could just chop around all day, right? Leave some single prints so you got a kickstand, right? So leave single prints between 21 and a half and say 24. You got a nice kickstand to hold the market up while you work on distribution between 24 and 28. Do we have the order flow to do it? Ça, c'est la question. If the overnight high is holding as a support, it means that everybody and their dog is bid to cover underneath it. Support is created by trap shorts. Right? So there's our rectangle, right? There's our single prints. Right there. Right? So just as I said, that's the kickstand. Now, if we have the order flow, I was off by a little bit. 21 and 3/4 to 23 and a quarter is our short position. As the market gets down here, if there are bids, the offer will lift. If there are no bids, the offer will hit the bids underneath 23. Watch. There's 23 pred. There's 22 and 3/4. So if they fill the single prints, that means there's enough desperate sellers to fill the buy orders at lower price. But if there's enough buyers, they'll start to raise price. Another scenario is sometimes you fill the single prints and then go back up. So watch out for that. So there, they're filled. That's good. Now watch for that overnight high. That's the next area of interest. There, tagged it to the tick. Look at the buying that comes in. Right? Now they're going to sell into it again somewhere here. Right? So if you're a short seller, right, you've got to make sure that it gets underneath that overnight high. I don't even know what that means, James, but I'm going to Google that after I get off the air here. And speaking of which, I've gone on a bit too much. Thank you, everyone. Please come visit us at thetradingsyndicate.org. Use the coupon code. It's less than 50 cents a day, and we'll teach you how to use funded trader accounts. Also, if anybody's interested in any one-on-one, reach out to me. I am available. Thank you so much. Have a wonderful weekend. And the rest of you, I'll see in half an hour. Bye for now. Thanks so much. Have a wonderful and safe weekend, everybody.